Welcome back. It is Jackson Hole week. We have a ton to discuss today. It may be a boring week in the markets, but that's when they want you to get complacent. So we're going to avoid doing that. We'll be talking through earnings coming out, what the Fed is going to say on Friday, and much more on today's episode of Money Never Sleeps. Thanks for joining us today, folks. As we get going, do us a favor, hit the like button, subscribe to the channel if you haven't yet, and remember that nothing Kevin or I say is financial advice. So please do your own research, yada, yada, yada. Kev, it's a pretty ho-hum week in the markets if you're looking for data that's going to point us in a direction. There's not a ton of it out there. We're going to see some jobless claims. We're going to see some home sale data. The big event is going to be Friday, though, at 10 a.m. Eastern, when Fed Chair Jerome Powell has his speech at Jackson Hole, at their Jackson Hole retreat. I'm not allowed in places as nice as Jackson Hole, so pretty charmed out there. Situation out there, Jay Powell. How are you feeling about the state of the markets? We're seeing that same kind of malaise here, as it's green on the day for equities, but nothing too crazy. I think a lot of people are just like taking a breath before we get Jackson Hole and then Nvidia earnings next week.
Yeah, this market's kind of lulling a lot of people to sleep, right? It's another green day. I think that we can thank a lot of leverage that is coming out of the yen carry trade. The unwind, as JP Morgan and some other firms have said, is reduced to only 25% of the carry trade left. But it's going to be kind of an interesting week because you wouldn't expect anything bad to happen in a week like this, right? We're getting towards pretty important levels. We're filling lots of gaps on the indexes and certain stocks as well. You got the DNC going on right now. There's a lot of stuff that could potentially just be political, not just in the U.S., but also in the world, that can cause any type of turbulence in the markets. But I think what remains to be seen is just seeing how the yen and the Japanese equities react. That's going to be the most important. And also seeing I don't believe that Jackson Hole is going to be that important. I think that Nvidia is a way more important market event. So I think it's just going to be kind of somber going into it. And maybe we just continue to see tech stay somewhat in this range right now of elevated, but not dipping by any means significantly.
Yeah, I was reading up on kind of what the market is expecting from Powell on Friday, and I don't get why anyone is betting on him signaling any sort of like 50 basis point cut or anything major. Like it's been years like of him just the same thing over and over. It's going to be about the totality of the data, right? And that's going to lead the direction of movement for whether it's a 25 basis point cut, a 50 basis point cut. I think we're pretty much, the markets have fully priced in at least 25 basis points. It has moved more heavily toward that being the situation than a 50 basis point. But, for the markets to be like, okay, we're betting on volatility and it's going to be dictated by what Powell says. I feel like if your bet is, hey, the only way that we go to the upside is if he comes out extremely dovish and is signaling how much the rate cuts are going to be and how big they are, for the rest of this year, then we're probably going to see a move down on Friday.
I will say this. Another piece of data that came out today that people aren't necessarily talking about, you're not seeing the markets really impacted by it, is the BLS revision of 1 million jobs, right? That's something that was coming out today.
I mean, 1 million jobs.
Did I say 1 billion? It will be one day. No, I'm just kidding. Hopefully not. But 1 million jobs, 100%. Again, I'm just thinking in market cap terms. But 1 million jobs. And that's something that we kind of talked about. We said that that data necessarily wasn't correct, and we'd see lots of revisions from the previous year. It looks like 1 million jobs. It was off. So that's no small number, right? And that's why I think a lot of people were kind of expecting there to be that soft landing. We're seeing the soft landing narrative also pop up again. This type of revision doesn't necessarily give me any type of confidence that we see that, or Powell is going to be, extremely dovish in a way where he doesn't signal that there's any type of fear in the markets or the market should fear anything. Obviously, he's never going to do that in the first place, but I do think that that data statistic does give some credence to maybe an emergency, not emergency cut, but like a greater cut than 25 basis points. That'd be the only way if they saw it as being something extremely negative for the labor market. Outside of that, though, I think 25 basis points in September seems likely, unless, I don't know, they looked at the inflation numbers and they were like, it's still not close enough. And they just genuinely want something to break in the system. That's just how you have to play it, I think.
It's all based on the data that's coming out and how that, meets or exceeds or whatever the expectations. But the economists have been so good lately. Like they've just been nailing these like at the numbers when they come out. Like we'll ignore revisions for a second because that really doesn't matter. But for inflation data, the expectations have been right in line with where things have been coming out. And so it doesn't feel like that is going to drive any added volatility. It's going to be, maybe a black swan event, maybe,
It has to be. They're too numb right now to react to data.
Once Japan finally does raise rates, which, maybe it's March of next year, could be sooner, that's going to have a much bigger impact. Like the days of, waking up and scouring and looking at these inflation numbers and that dictating the day's direction in the market, those have come and gone, right? That was like 2022,
Yep.
2023 stuff. Like we've kind of gotten numb to that at this point. We have NVIDIA, like you said, next week, 9 days away. And when I'm looking at NVIDIA and really everything in the S&P and the NASDAQ, everything is just wildly overbought right now. We've moved to the 100 on the stochastic RSI, and we're at these levels where, it's either a double top or it's breaking to new all-time highs. We have some trend lines out there we can look at on individual stocks and on indexes that kind of show like if we don't break above some of these levels, we're probably moving down pretty quickly. And if you're day trading those things, it definitely could lead to some opportunity. Now, we'll stick with equities before we move into crypto. When we're looking at something like the NASDAQ that bounced off of those lows 2 weeks ago and is moving back toward potential all-time highs, I want to answer the question that's the title of the episode of, are the markets getting exhausted? And I don't think it's just a yes or no answer, right?
Agreed.
I think with the current amount of liquidity in the markets right now, the answer is yes, right? But we also know, looking at money markets and how much money was poured into bonds over the last couple of years, that there is still a lot of sideline money. And we saw retail buying the dip a couple weeks ago. I forget who it was that came out and
JP Morgan
reporting on that, kind of like how much their customers were buying up. So, I think it's getting exhausted right now, and it needs to continue to move up. It needs a much more powerful catalyst than it does in order for it to start coming back down.
Absolutely. I'm just pulling this chart right here. This is the NASDAQ, and this line right down here is the carry trade that Monday morning where everything kind of just went, limit down to start, and then obviously it bounced back. Why is that important right now? And why is that important with everything that's going on? Well, we kind of can look at the NASDAQ and some of the things that have happened in the past, I'd say 2 years, even 4 years really. And we could see how frothy this has become, obviously, as early as March of 2020, when there was a ton of liquidity pumped into the system, right? If we take a look at the NASDAQ from where it was in 2020 to where it is currently, it is up about 187%. That's an insane return on an index that is, one of the top 3 indexes where most people put their money because it seems like it's a safer bet as opposed to, obviously owning these stocks outright, right? It seems like a safer bet than owning something like Palantir or for owning something like NVIDIA. Before any of this type of mania happens, people just want exposure to tech. That's how you do it. But why this is really interesting is because this kind of coincides with, all these central banks just having rates drop to zero and, negative rates in Japan as well. And when the Federal Reserve started raising rates, we started seeing the equities drop down, and then Japan has this negative rate cycle, and they've had it for the longest period of time. we can see that that's kind of what's driving a lot of the tech moving to the upside. That's what we saw companies like ARM and Nvidia being absolutely just funneled a ton of money into. We were seeing China drop significantly. We're seeing a lot of money in Asia decide, where do we want to go? Do we want to stay in Asia or do we want to go to the US? A lot of that money borrowed the yen, threw it into the US market, took advantage of these percentages that were just going up nonstop, nonstop, nonstop. I mean, if you look at this on the monthly for the NASDAQ, I mean, this is pretty insane, right? If you're in 2022 and you started borrowing the yen because rates were going positive in the US and rates were still negative in Japan, then you're up, let's see, from the bottom of the NASDAQ to where it currently is, you're up 86%. That's a shit ton of, especially if you had a ton of money that you threw into it. You look at something like NVIDIA as well. And I mean, you can't, this is like the ugliest thing to look at on the monthly because it's just straight up. I have to delete all these
It's not
TA.
not ugly if you're an Nvidia holder to see it going straight up.
No, not at all, right? The interesting thing is, though, what we're seeing here is that it's just going straight up from 2022. So what are we really talking about? We're talking about the yen carry trade. And when we look at where we are right now in the past few weeks, I mean, NVIDIA, I believe, is up 40 something percent since that dip down here, went all the way down to 90 just a few weeks ago. But how quick that trade kind of unraveled, yeah, it's up 42% right now from that low. How quick that trade kind of unraveled when they raised rates. You know, you saw the VIX shoot up to 65, and then nothing necessarily happened in the system. The banks are still okay. The S&P only dropped 200 points, but then it bounced right back to only be down 123 that day. And the markets kind of were like, well, nothing bad necessarily has happened. You know, they raised 25 basis points, but now they're talking about not raising it again until March of 2025. Could we still continue to add leverage? And I think their answer was yes. So I think a lot of what we saw was obviously retail buying a bit of the dip because they're like, oh shit, Nvidia at $90, let me get in on that before it goes to 800 because they don't understand market cap. I'll say that joke every time I get a chance to. But then we look at what some of these banks and what happened with the yen, and obviously the Bank of Japan being so important, trying to save the currency, but at the same time trying to save the equity market as well because it holds that bonds and currency. Well, it just kind of allowed this reality to continue. And we're at a pretty critical level for NVIDIA. And I talk about NVIDIA because I think that's one of the big ones that is tied with the carry trade. When the carry trade unwinds fully, then you probably see NVIDIA collapse to a level that's a little bit more reasonable because there's not as much liquidity being pumped into the system. We've seen tons of people, both from insiders to large investment firms, offload their NVIDIA after Q2 earnings. And then we're going into Q3 earnings, or is it Q3 earnings or Q2 earnings?
For Nvidia, it should be Q2 earnings.
Q2 earnings. There's always one company that's always like one quarter ahead. They had that weird quarter. I always forget if it's them or there's another company.
I mean, it might be Nvidia. There's some that's like a fiscal year, like ahead, like
Yeah,
a year ahead, and it just
and
it confuses my very simple brain.
yeah. So pretty much what's going on. Oh, what the hell happened here?
I have
Oh,
no idea.
there we go. There we go. Yeah. So once those earnings reported last time, they started selling off, and then now we're looking at pretty much the yen carry trade. All these people were late to the game, throwing more money into the system, more leverage into the system. If Bank of Japan says they're going to raise rates again, and that was just BS because it wasn't an official member that mentioned that about March of 2025, then well, all bets are off. This probably could get rejected to this trend line right here that it's got from June of 2024, July of 2024, and then where it's kind of hitting right now in August 2024. We're at 100 right here. Back here, we weren't even at 100 on the daily. We were at 47.36, and this was just kind of panic, I think, in the system. A lot of people selling off their positions. And then you were at 198 up here when you hit the top of that in June of 2024. So what I'm thinking is this is all carry trade, people getting leveraged once again. Why is that important? Well, because nothing broke the first time. So they think nothing bad can happen. The VIX already shot up to 65. It can't happen again. I disagree. I know you were the VIX bull a while ago. I think I've kind of taken over as the VIX bull because I'm very excited to see volatility in the markets, and we just haven't seen it yet. A 1,200 point drop in the S&P, like over the period of a few weeks, obviously would increase the VIX significantly. Probably one morning more so than the rest. But when I'm looking at this here, I think because of what happened at some of these major events when we saw the VIX spike in the past, right, right here, that's COVID. Here, Volmageddon. Let's see, with 2011, I think there was another one there somewhere around here. Or no, obviously 2008 is one, and then there's another one right here, 2015. Those right around can't remember what happened in 2015, but obviously we see these spikes, but they're not small events. They're important events. This is obviously the yen carry trade unwinding a little bit, but nothing necessarily happened. I think the crush that followed right after it too is kind of just a lot of people closing some of those positions and seeing if they could be repositioned for something that comes in the future. I think that when the S&P does drop, we are going to see the VIX spike once again. I'll make the bold claim to say that we're probably going to go to all-time highs with the VIX. And I think it's just because a lot of people are caught off guard thinking that, okay, it spiked once, that's it. Now we're in a new cycle. I think a lot of people are doing the same thing I was doing. Now we're going to just chart it like this. I don't necessarily think it's done. You know what I mean? I think that we have a lot further to go with this, and we could be seeing the VIX at 100 maybe by next year, even as early as this year, if something bad were to happen to the system. But the carry trade is why the markets are up right now. People are leveraged. They're back in the markets. They're excited. It seems too good to be true. Everything's working out, right? Until it doesn't. And then when that's the case, then obviously shit will hit the fan. I hate to say, I hate to be so negative all the time. I also don't hate to be so negative all the time because this is just the reality of the situation that we're in. But it's important to understand why things go up and why things go down. And for the most part, this is kind of the big reason why everything is still going up when kind of saw the VIX already hit 65 and nothing broke.
All right, let's talk about crypto for a little bit. We got one of my favorite buy signals over the weekend, back on Friday and Saturday, and that is when all the guys who are in precious metals and are max bullish on gold start taking victory laps. That's usually a sign for me of time to increase my Bitcoin position. We saw all these guys once gold hit, they were all just sitting around waiting. They had their drafts ready for what they wanted to post about gold once it hit 2,500. And they all hit send simultaneously because I've never seen so many people victory lapping something as I did when gold hit 2,500 and then saying that, Bitcoin is dead. You had people cherry picking some timelines of like since 2020, I think it was Lawrence McDonald, since 2021, here's what gold has done and here's what Bitcoin has done. Let's move that timeline out a year and then we can talk about it too. Like, it was so funny. And to me, that is I'm not going all in Bitcoin here kind of thing, but I'm definitely going to buy some more because this has been a very reliable signal over the last few years.
Yeah. Here's the best part about it too. Obviously the crypto bros versus the metal, I guess metal heads. I don't know. That sounds too cool for them at this point.
Yeah.
Right.
The metal dorks, the precious, they're the precious metal guys. So they're very precious.
Add precious in there. That makes it sound cuter. Yeah. So I mean, those guys like Peter Schiff versus say like a Leia Halpern, I guess, because those are the ones that are always like, I would say those are the two, the big dicks of their respective fandom bases. But
I mean, she's a dick, all right, but not in the way we're talking about.
Right. I don't know how many. Yeah. Anyways, that's what I'm thinking is they're more similar than they are dissimilar when it comes to these assets, right? I genuinely think that Bitcoin and gold will react the same, given what circumstances happen. Either it's hyperinflation or we get something similar to 2008. I think it's going to play out very similar. I'm going to pull up Bitcoin right now. We're going to take a look at just kind of how it's performing. You and I were talking about how fucking boring it's been with Bitcoin recently. And it really has. It's been so boring. It's hard to watch. Every time you think it's going to drop lower, it doesn't, because out of nowhere, there's a shit ton of stable coins that are printed. Justin Sun and Paulo are still out there. CZ, I think, gets out this month too. That's why it's been kind of quiet. But, you've had this type of just nonstop money kind of flowing into crypto. And when you do see a lot of these liquidations that should happen, it's only within a range, right? Right now, what I'm seeing here, and it's so kind of boring to watch. It's not even a megaphone pattern. I mean, it is a megaphone pattern, but it's not like a parallel channel by any means. It's just nonstop back and forth, right? It's just zigzagging, hitting back and forth. It's going to break at one point. These megaphone patterns usually mark the top or bottom of a move. Usually, if you see it a lot lower, that's when you break up. If you see it up higher, usually it breaks down. But it doesn't mean that it can't just keep ranging in this for a period of time, right? Like, we could argue and say that something happens that causes people to speculate Bitcoin's going a lot higher, we could be at 70,000 again. It's very possible. Do I think it's likely? I don't know. Right now, it's trading below the 60,000 level. It's been under here for quite some time since the carry trade. Couldn't get above it and hold above it. It's it's just kind of a boring place to watch crypto. And we can see that it's getting extremely overbought on the daily stochastic RSI, which isn't necessarily a good look considering how little the price action has moved within this range. Usually, you'd want to see this either extremely low and the price is moving up. That's kind of a bullish indication. Or if it's, doing what it is right now, it's kind of a bearish indication. But how bearish is that? Is that down to the lower trend line at like, somewhere around 52 to 48K, possibly. It does it break lower than that? Maybe it goes to like 40, yeah, like 48K seems like a pretty good level of support down here, kind of where it bounced off here on the 5th of August. But we just don't necessarily know. We look at things like Bitcoin dominance. Looks like it was above 57 back on August 5th, and that week when the carry trade unwinded. We look like we're trying to fight to get it back above it. It looks like there's plenty of room for it to go up. But again, we're looking at Bitcoin. It looks like it could go down based on stochastic RSI. And then we just look at other things like ETH, right? ETH looks extremely weak to me with how much it's bounced since the carry trade. But however, when we're looking at this, extremely overbought on the daily stochastic RSI. It looks like there's not a lot of momentum, not a lot of push into the equity market. XRP had that stupid thing that pushed the price up, whatever. We don't necessarily care about XRP anymore. Cardano, not even the top 10 crypto anymore. That was knocked out this morning. Shiba Inu took its place. So looking across the board, there's not a lot of strength in the crypto market right now. Why is that? Is it just sentiment? Is it just people are trying to take liquidity out as much as they possibly can? Or is it the amount of money that's flowing in is only focused on, protecting some of the price levels of these major ones? Is it because, Bitcoin and Ethereum are more important now than say the rest of the alt market? I think a lot of people can still make a lot of money in the alt market, but in terms of, allowing that kind of stability for where there's a lot of liquidations lie for not only now just crypto people, but also tradfi people, it's really important that some of these levels remain elevated. So that's why I think that we're kind of seeing this boring price action. And again, it's once we get to these critical levels, we see Tether prints, $1 billion or so, and then it kind of just hovers right back above where it was going to drop below. And it's very boring to watch that. But I do think that there are a lot of scenarios that could cause maybe some volatility and downward price action as much as there could be for upward price action. I just don't necessarily see Tether printing enough to push the price up. I just see it printing enough to hold the price up, which is two different things, I think, in this stage of the market as well.
All right. We're on different pages here. I think that we're still there's plenty of accumulation opportunity here with some of these alts. Like, could alts bleed some more? 100%. I at some point though, we are going to be needing to accumulate those, and which ones is the big question. I think you, me, and House should do a show where we talk through kind of what's on our watch list when it comes to accumulating for the next run up. That's for a different day. What else? I know you got total 3 pulled up right now. Is that total?
Yeah, it's total 3. I just see altcoin market. I'm looking at itself, right? I want to see more strength in the alts because I do think that there's going to be massive value in the alts. And again, massive value comes with Bitcoin and Ethereum doing extremely well, right? That's the important thing. They have to be doing well. They have to be in a bull market where we're continuing to see the price push up. Honestly, House might have the best strategy right now. Again, nothing we say is financial advice, not financial advisors, yada, yada, yada. It's all we always say it. But, I feel like a lot more money is likely to come in for some of these memes and then some of these, staples like AVAX or Cardano or Link, any of that anytime soon. So it's interesting. I just don't see relative strength. I want to see some type of strength. And then let's look at this on the weekly too, because I think that it's pretty oversold, right? Yeah. I mean, it's oversold, but that doesn't, if Bitcoin is overbought or something like that, then this could be, catastrophic for alts. I want to see a place where we get a really good value. And I think that majority of the value for alts still lies between this 306 billion all the way down to this 115 billion. I think this is the buy range for me. And I think that's where we're going to see the greatest return on investment. To quote, I won't even make that joke right now. You guys know the joke from yesterday. She said it 4 times in the interview. But this is definitely, the range that I'm going to be looking at for alts. Outside of that, I'm not touching crypto until Bitcoin decides to bottom, because I think that's when the entire crypto market will bottom.
All right. Anything else worth discussing today? Like I said, it's a pretty boring week until Friday, but we will be here on Wednesday as well, kind of talking through what has transpired up to that point. I'm all good. If you got anything else, say your piece, and then we are calling it a day.
Yeah, I just want to take one look at something because someone talked about this on Twitter real quick, and they said that even after the carry trade unwind, uh, IWM and the Russell and stuff like that, which are consumer staples, necessarily have not rebounded as well. Small caps are still within trading range, right? This is August 5th. It's not performing nearly as strong as say something as like the S&P, right? Where the S&P has jumped up significantly. The Russell is obviously lagging pretty badly comparatively. It also didn't drop nearly as bad, but still I think that's kind of telling of the trade that we're in. It's still a tech dominant, tech heavy trade. A lot of it is because of leverage that's in the system. If you got liquidity and you got leverage and you want to throw it at something where it's going to make a lot of money and you're going to see a lot of, trading, you're going to throw it at the top seven. They're doing extremely well because that's where you're going to see a lot of volume come in for a lot of those assets, which is really wild that we're seeing this much volume kind of come in August being such a low liquidity month. But I do think that is 100% kind of telling of why this market has not yet dropped. It's a tech dominant market, but once tech does decide to go, I think that's going to be it's going to be pretty abysmal for a lot of the returns that they were seeing during the carry trade. Outside of that, I'm just excited to see kind of these next 4 days. I think the DNC is going to be interesting to see how people react to maybe some of the policies or things that are mentioned. Similar to how the DNC was or the RNC was happening, and even Trump talking with Elon, they're expecting the Bitcoin price to be moving up or down. That fell flat on their face, but I'm still going to be watching the charts and seeing how the news kind of correlates with the financials the next few days.
All right, that is going to wrap it up. Appreciate those of you who joined us today. If you have not yet, make sure to like today's show, subscribe to the channel, drop a comment in there to help us with the algorithm. It's all greatly appreciated. Have a great week. We'll be back on Wednesday. Got some FOMC minutes we can talk through, all sorts of good stuff. Stay safe in the markets, everybody, and we'll see you soon.
Take care, everyone.